Good morning, everyone, and thank you for joining the PENNANT International Group results presentation. Before we begin, we would like to submit the following poll, which you'll see on your screens. Throughout the presentation, investors will be in listen-only mode. However, questions are encouraged and can be submitted at any time via the Q&A tab, which is located on the right-hand corner of your screen. The company may not be in a position to answer every question it receives during the presentation. However, the company will review all questions submitted today and publish responses where appropriate. These will be available via your Investor Meet company dashboard. Finally, we would like to remind you that today's presentation is being recorded. I would now like to hand you over to Philip Walker, Chief Executive, and Darren Wiggins, Chief Financial Officer.
Thanks, Tom. Morning, everyone, and welcome to this PENNANT International Group investor briefing. Today, hoping to provide an update on the progress we've made with the implementation of our strategy, which is to transform PENNANT into a scalable software and services business. And the presentation will be split into a number of sections. We'll start with a bit of an overview of the period, highlights of what's happened over the last 6 months. I will quickly run through an update about PENNANT, but there's lots of information in previous presentations we can draw upon, so I'll give you a quick update on what we're doing. I'll hand over to Darren, who will take you through the financials in a bit more detail, and hopefully we can provide you a bit more of an update on Auxilium, on what we're doing there, and a bit on the outlook in the future. So without further ado, let's get going. For those of you who don't know me, I'm Phil Walker. I'm the Group Chief Executive for PENNANT, and Darren here to my left, right, depending on who is on the screen, CFO.
Good morning, everybody. Chief Financial Officer, joined the company November 2024.
So welcome back, those existing shareholders, and I look forward to hopefully meeting some new potential shareholders today, and hopefully the story you hear will be encouraging, exciting. We want you to pursue PENNANT further. So let's start with the overview of the last period, and let's give a bit of an update. So we'll start with the first bullet point there, Gemfly MOD contract slippage. The results in the first half are not what we wanted to achieve, and delays on this contract moving to the right has exposed our cash flow, our performance, and resulted in the placing subscription that you would have heard or read on the RNSs yesterday. This contract has not gone away. The contract is still progressing positively towards award, but unfortunately, MOD procurement process has added in new authorization levels, which delays award. But it highlights the importance of the strategy we've got to pivot away from these types of contracts. And in that regard, I'm pleased to say there's been some solid progress made in executing that strategy over the last 6 months. You can read them yourself, but I just draw your attention to a couple of key points on this slide. The 50% of installed base transitioning to Auxilium Gen S, that is 50% because as we move through the maintenance renewals, customers migrate on renewal. We expect by the end of the year to be through 90-95% of customers transition to Auxilium. And to date, other than 2 major defence primes that will require a little bit longer to move over, all of the customers have moved from a perpetual previous license onto the new subscription model. What does that mean? It means that within our annual recurring revenue base, we've embedded in future value growth as those customers move from their current price protection into higher pricing. I'm also really pleased to give an update on the go-to-market plan. The announcement of Siemens in particular as a global partner, but also the announcement of different partners in India, South Korea, Japan markets that are new territories to us and new markets. And it's been pleasing to see that during this period, the Auxilium product has been sold into new customers and new markets, not through the partners yet, and we'll come on to that later, but directly through our existing BD channels. And we've sold into shipping, we've sold into space, we've sold into robotics, not market adjacent verticals we targeted, but markets that have found us. So getting cautiously optimistic about the future of Auxilium. Darren will talk a lot more about the ARR, but I just draw your attention to the final bullet on this slide. It's mentioned in the RNS and mentioned it in the presentations. We are seeing, as you'd expect in defence at the moment, very strong bid activity. As it stands today, the group has well over £10 million of contracts that are in advanced negotiations. What does that mean? And that, just to be clear, it does include the Gemfly contract at 5.8 million. What that means is that we're not reliant on one contract. We've got a handful of contracts that are moving towards award phase. Would I like to say which one's coming first and why? No, I wouldn't. We've been burnt too many times by these types of contracts, but we're feeling very confident that will obviously an element of news flow over the next period that will give the company and investors confidence around 26 and 27. So that's the summary. I'm just going to move on to the next section around Pennant. But I'm going to do this relatively quickly because there's lots of information in the previous slides. When we reintroduced Pennant through IMC in November 24, we spent a lot of time talking about how Pennant operates and what we're doing. There's a summary in these slides, but you can always go back to get more information if you need to. The key point here for me is what do we do and what is the output? If you follow the press, if you follow the news, if you look at the defence show in the UK last week, it's all about readiness, operational efficiency. Yes, budgets are going up, but actually there's a finite amount of resource to deliver readiness. So everything we do as Pennant is around maximising that operational efficiency. How do I trade off cost versus availability? How do I get more value for money? And why it matters? We've got to be able to deliver when we need it. We've got to be able to make the right decisions. There's no point making decisions on bad data. We'll come back to that later. Cost is vital. And then there's the whole governance piece. These are highly regulated sectors. That compliance and data integrity is vital. So everything we do is designed to drive that. Again, very proud of our customer base. This doesn't change. Our strategy is very much to become an enterprise solution of choice. As a software suite, we're still focused on projects, and people are still focused on individual applications. As the integration of Auxilium progresses, with 2 out of the 3 products now integrated, with R4I to be integrated later this year, we're now seeing the opportunity to cross-sell capability into these customers and also move up the value chain. And that strategy holds true. And with the partners coming online, like Siemens, who can target an enterprise level, we're hoping to see strong growth through this customer base over the next 18 months. But how do we operate? Darren, you want to give that thing?
Thanks, Phil. Yes, certainly. So as many of you already know, we address the market and in fact measure our performance through 3 key segments, namely software, technical services, and training solutions. Taking those in turn, software is our proprietary software tools that help clients manage and use complex data, as Phil's alluded to, ensure equipment availability and comply with industry standards. And that's very important, that last bullet point. All of that comes under the Auxilium brand, and we'll talk some more in a lot more detail later in the presentation about the Auxilium software and the customer value proposition. Technical services are our services that support all of our software and training solutions, and they tend to wrap around software licenses that we've sold or training solutions that we've sold, involving consultancy, support and maintenance, training itself, and bespoke development work. Training solutions, as we've said many times, is Pennant's heritage, and that's the provision of hardware, software, and virtual solutions to give critical training for maintainers and operators of all kinds of assets.
Thanks, Darren. So just a quick reminder, I won't go into this in a lot of detail because you can go back and hear more about this in December if you want to. But Pennant, just because is and has repositioned and is still on that journey. Big strategic shift away from its traditional lumpy training services contract towards a scalable software and services model. And the key point here on the right-hand side is that we've restructured and reorganized the training system business. Repositioned it to focus on aftermarket, our installed base, retrofits, overhauls, and the type of work we're bidding and looking to is very much in that space. What have we done? Well, next slide, we'll put in a second. You would have followed in the RNS through this year. We've now executed the property program with the 3.1 million property dispensed. We've moved to an outsourced production model. We've managed to retain critically those key skills and talent. And actually that restructuring work has worked. The training business is going to generate around 2 million of revenue this year. And the business was restructured to break even that level. So the training business restructuring exercise has achieved its goals. And now the challenge from us as Exton is to execute the plan to deliver those contracts to show growth profit in that business. On the software side, a key aspirational here and what we're doing is developing those resellers, agents and partners. There's a slide later in the pack talking about what we've done there, but we continue to invest in our Auxilium suite. And as I mentioned a short time ago, we're looking to integrate the third part of the software, which is the R4I publications, into the suite later this year. So we've got the full integration of the capability for our customers. I'm now going to hand over to Darren, who's going to take you through the financial highlights.
Thanks, Phil. Okay, yeah, highlights page first. We start off by saying that year-over-year trends are in line with our budget expectations following the completion of certain contracts at the end of 2024 and at the start of 2025. But it's fair to say that those year-over-year trends have been amplified by training contract award delays that Phil's already alluded to. For H1 2025, Pennant has recognised 4.5 million of sales, an adjusted loss before tax of 1.8 million, and a net debt of 2.1 million. We're pleased to report that annual recurring revenue within our software segment are increasing. Auxilium sales, as Phil's alluded to, with several new customers and new territories and in adjacent markets, and we'll come on to that ARR shortly. And as Phil's also alluded to, we've continued to invest in capitalized development of our Auxilium software suite to the tune of £0.6 million in the first half of the year. And that meant successfully completing the GenS and Analyzer integration that we'd signposted at the end of 2024. And that was for a Q2 release into the market. We've completed the property disposal program that we said we would. Those properties were held for sale in the December 2024 balance sheet. We've realised gross proceeds of 3.1 million, 1.1 million of which was recognised or realised post-period end in July, in fact. And overall, that's provided a net gain versus carrying value of those assets. And as we announced yesterday, post-period end, the group has proposed actions to strengthen the balance sheet and ensure that ongoing operations are appropriately funded via the proposed 1.25 million equity raise. Thanks, Phil. Moving into some more detail, we'll skip through the statutory income statement, which is there as a point of reference and available in our announcement, and maybe to the segmental detail. Please, Phil, thank you. So segmental revenue performance, and I'm going to start at the foot of the page here in our training systems segment. The training year-over-year trend was characterised by successful completion of the Apache program in 2024, a £9 million contract across 3 years that yielded a very healthy gross margin. As Phil has alluded to, we do expect training, despite the completion of that large project in 2024, we expect training to achieve £2 million of revenue for the full year. And that benefits from continuing aftermarket contracts and some smaller discrete deliveries that we expect to complete in H2. Moving up towards our technical services segment. Technical services segment has seen the completion of data conversion projects in Australia at the start of this year. And that's a contributor to the year-over-year trend in that segment. Additionally, we've seen a softness in our rail business, as the rail business is in an industry-wide hiatus in the UK on project spend. I'm pleased to say, though, that we're bidding on new data conversion projects throughout 2025, and we expect to see a turn in the rail segment spend in H2, such that we're confident of getting back to technical services revenues that we'd seen in 2023 and 2024 as we move into 2026. And then finally, in our software segment, we're pleased with the progress, and we'll go into more detail on our ARR slide in this presentation. But it is probably an appropriate point to pause and say that the software sales are flat year over year. But as Phil has alluded to, we are seeing the transition of customers onto subscription licenses. Whereas in prior year, in H1 2024, the licenses were sold under a perpetual basis. Perpetual licenses we recognise immediately at the point of time of sale, whereas subscription licenses have an element of that sale that are spread across the term of the license contract. And that's a feature of the trend year over year in that software revenue line. Thanks, Phil. So to the ARR slide then, and as you can see, we've seen an increase from 2021 at 1.1 million of annual recurring revenue to 2.3. Annual recurring revenue is defined as the annualized revenue generated from our software subscriptions and maintenance contracts. We expect this number to grow to 2.5 million by the end of this year. And as Phil has alluded to, in 2026, we'll benefit from the ongoing transition of existing Amiga customers onto the GenS software suite. So we expect further progress in that number throughout 2026, as well as the fact that we'll be adding new licensees as we go. Thanks, Phil. balance sheet. I'll just flag that the reduced net assets that you see there from prior half year 2024 of 10.5 to this half year 6.3 was already a feature of the H2 2024 restructuring exercise and is explained in more detail in that 2024 annual report. And then finally, cash generation in the period. We continue to focus, as you'd expect, diligently on working capital discipline, and I'm pleased to see pleased to report the change in working capital there in the first half of the year as a positive number. Net debt has moved from 2.3 at the end of 2024 to 2.1 at the end of H1 2025, and ultimately that is the proceeds from the property disposals being used to fund working capital and being used to fund ongoing investment in our Auxilium suite that I flagged on the highlights page. Post-balance sheet events are notable there: the completion of the sale of the UK properties, 1.1 million of which was completed in July, and the proposed fundraise that we announced yesterday of 1.25 million. I'll hand back to you, Phil.
Thanks, Darren. So, quick update on Auxilium. So, for those who joined us in July, James St. George, our Chief Product Officer, gave a more detailed update on Auxilium. So I won't be able to do justice to the product, but let me just go through a couple of slides to provide an update. So for those who don't know, what Auxilium is designed to do is to support the management of an asset or a system through its life cycle. The discipline that we support is something called integrated product support, or previously called integrated logistics support. And this slide articulates everything that we're trying to do as a company in terms of outputs. If you look on the right there, you've got the combat surface combatant frigate, which we support in Canada, is all around delivering that mission capability and that operational readiness. And that comes from these two aspects. It's a well-known industry stat that the most of the cost of running an asset is the in-service phase. Yes, it's expensive to buy. Yes, it's expensive to build, but that only accounts for about 20% of the cost. The support solution operation of these systems for 20, 30 years is where the big cost savings and efficiency can be made. And Auxilium as a tool set is designed to support this whole process with a particular focus around the support phase. So, what does it do? Some people would have seen this slide before, but there's a quote on here from one of our new global partners, and this is key. So, as a suite, as an application suite, Auxilium is made up of 3 applications. We've got Gen S, the configuration management, the super database, holding in parts information, managing that configuration information. A huge amount of information that required for complex assets, millions of parts, suppliers, locations, really important. Then you move to the right to the analyzer tool, the modeling and analysis, optimization, cost versus availability. If I'm going to sea for 6 months, what spares do I take? What maintenance do I do? What preventative maintenance is required? What skills do I need? And James took us through this in a lot more detail in July. And those 2 elements are now fully integrated into the same database on the left-hand side. The final phase of this Auxilium suite is R4I. R4I is a documentation management tool. It's for publishing and distribution of manuals. And when you think of your car manual, how do I lift the hood? How do I change the tire? Very complex documentation support these systems. In terms of progress, the mapping of the data modules that sit behind the technology is 95% complete. The focus now is the user interface, and we're confident of launching this full integration in the near future. And that will give our customers the ability to run the entire end-to-end process through one suite. Why is this important? Now, our source data for Auxilium starts with the ERP system, something like SAP, or the product lifecycle system, something like the Siemens Teamcenter, and ends up ultimately in the field of operation and availability. To quote our partner, asset availability starts with data configuration. It's no good trying to run and plan things off poor data. And Auxilium is designed to validate, configure, and control that data, to control it to standards, to deliver it to requirements, and to make sure decisions can be made to operate effectively and ensure availability. And it's extending that digital thread right from the front end of design and build and purchase right through the life of the asset. And if you only need to watch the news to see the uncertainty around availability, readiness, and it's a real focus for Western Europe and NATO allies at the moment. And this is something that Auxilium plays straight into. Why do people do this? I mean, obviously 80% of the costs are in the operation. You can read these stats yourself. If you think about the cost of these assets, the cost of an F-35, the cost of an aircraft carrier, small percentage savings from doing this process and applying it properly can make tens of millions of pounds of savings. And this is where PENNANT can really drive value for its customers. And it's this data integration and data management piece and allowing our customers to make decisions based on good quality data. And data as the new frontier is vital. And Auxilium is designed to do that. Why do we think it's designed to do it? Well, start on the right here, quality compliance. Got to remember the barriers to entry of defence, space, nuclear are very high. Compliance with international standards and specifications is vital, and the product tool set allows our customers to fully comply with those standards. Clearly, cost is important. Anytime you can ensure an asset's available, not down, parts of it, but it reduces costs. Critical when there's finite budgets and everyone's trying to make money stretch further. But the real key reason for me at the moment, the real driver we see in the market is on the left, sorry. Mission capability, enhanced readiness and reliability. How do we ensure that if required, I hope they're never required, these assets are available where they're needed, when they're needed, and that they actually work? And Auxilium is part of that support process to ensure that the customer's assets and customer systems can deliver if required. So just to wrap up before we move to questions, looking forward, our priorities remain the same. Expanding and developing our go-to-market channels is critical. Scaling this business directly is going to be very tough. So building these partner channels out, as we have done South Korea, Japan, and other territories is vital. As we move up the value chain, ensuring our support functionality, our servicing, our installation, and all the ancillary aspects of Auxilium work to world-class customer experience is critical, and we're investing and driving that piece. And there's gaps in our capabilities, so the partnerships don't have just to be around selling the product. It's what other skills, knowledge, and capability we need to add to our tool set in terms of partnerships, development, to drive growth. On the training side, Darren mentioned it earlier, we want to continue to involve the subcontracting model. We're outsourcing production, we're working with partners, and we want to continue to win the focus aftermarket contracts that allow us to upgrade, enhance, and win better margin work. To talk about the software specifically, this is a slide we introduced in December. 2025 is always going to be focused on those direct channels. It takes time to build partners, to onboard them, to train them. It's a technical sell to sell Auxilium into a prime or an OEM. Therefore, we've got to be patient to allow that these partners the opportunity to build their pipe and build their knowledge. But we see the growth of this business coming through these partner channels. We've brought these online so far in Germany, Japan, India, South Korea, and obviously global partner Siemens, and there's more to follow. And as you'll see on the graphs there, we expect the growth in this business, as well as organic sales, that will come through our direct market. We see the partner channels as being the engine for growth for this business as we move forward. Finally, the outlook. Darren, do you want to cover this?
Yeah, absolutely, Phil. No problem at all. So full year 2025, market expectations out there in and around the 10 million mark. We have good confidence given that we're carrying contracted revenues of 9 million at this point in time. And we continue, as we alluded to earlier, to see and expect accelerated growth in the Auxilium Software IRR via the advancement of the go-to-market strategy that Phil's just pointed towards. We also expect to come to market with announcements in the coming months around several training system contracts that are in advanced bid stages. The total contract value of those opportunities in advanced bid stages are in excess of £10 million, which gives us confidence beyond 2025. And that does include the Genfly refresh contract. 2026 market guidance has us returning to a positive adjusted PBT and cash flow, and that's after investing a further 1.3 million in the Auxilium suite. Any closing comments from?
No, that's great. So thanks for that. Tom, if we submit the questions.
Yeah. Thank you, Phil. Thank you, Darren. Now, if we can turn to the questions, we have a number of questions that were submitted ahead of the presentation, but please do continue to submit your questions via the Q&A tab. We have a number of slight overlaps in topic areas, so we'll group those together. But could I possibly start with what gives you confidence that Gemfly will be signed before the year end?
I'll take that one.
Yeah, absolutely.
So I'm not going to say, Tom, that it will be signed before year end because we've been burnt too many times with delays in government procurement defence contracts. What I can say is that we've done everything we can to submit the what's called revised offer, confirmed offer to the MOD, and it's now in their approval process. We've got no control over that approval process, which includes potentially going to Secretary of State Office of Defence for approval, but we know that the project is funded. We know we've provided the technical responses that are required. We understand the MOD timelines, and everything they've indicated suggesting that we're before year end. But my comms level, would never say at this point in time, given we've burned twice this year on this contract, that's going to come before year end.
Okay, perfect. Yeah. Of the £10 million of potential contracts, how close are you to securing them, and what will they contribute to financial year 26?
If I do the first bit, you can do
That sounds sensible.
So there's a range of contracts, UK, nuclear, virtual reality, software, Asia Pacific. How close are we? They're all moving forward at different paces, and I wouldn't like to hazard a guess about which one would come first and why. But what I would say is they're all either contracts with existing customers, they're single source, or the OEM, which gives us a degree of confidence. And in some cases, they're contracts where the customers have put their hands in their pockets to fund the development to get to a proof of concept phase before a main contract. So as we sit today, I've got a high degree of confidence that we'll see some good news flow over the next 3-6 months, but I can't predict which one will come first and why. In terms of the financial impact, I'll pass it to Darren.
I guess if we look into 2026's order coverage of our market expected revenue, we're currently carrying about 50% order coverage. If we forecast a conversion of, say, a sensible mix of those contracts that we've alluded to there, then that coverage could be as high as 80%. So I guess that gives you a flavour of the financial impact in the near term of converting, as I say, a sensible mix of those contracts.
Yeah. The key point, Tom, is Gemfly as a contract is left us exposed to the issue and highlighted a model, and the delay in that contract has caused obviously financial disappointment, cash flow challenges. However, we're not in a position where we're waiting for just Gemfly now. We have a range of contracts from different customers, different sectors, and different countries, so that gives us a confidence around next year.
Okay, super. We've got some questions on the fundraise, so we will come back to that. But if we can just look at the partners, and a couple of questions we have here. Martin asks, how is pipeline attribution handled? Do you get this visibility on Siemens sourced deals, and how often will they share forecasts? And I'm actually just going to add another one to that, just so that you can talk around the issue potentially. Are your partners currently making Auxilium sales?
Okay. Yeah, take the last bit first. So the partner strategy was launched in January, and I think I alluded to in the presentation that it's taken a chunk of time to onboard the partners. If you take Siemens example, where we're being onboarded, they allow 12 months for the onboarding process. We're looking like we're going to get through that in about 3 months. So it's much more than just selling the product. It's a technical sell, and we need our partners to be able to represent the product technically and the services that go alongside it. So we're very selective in identifying the partners can do that. In terms of visibility and partners, to date, there's been no partner sales, but we are getting visibility of the channels in South Korea, in particular, and India. And Siemens give us good visibility at the moment of their bids, their activity, and timeframes. But until we get through the onboarding process and a live part of their proposition, they can't actually sell us. So we're not anticipating any partner sales from Siemens this year, but we expect it to start gaining momentum next year. And some of the other partners, we're hoping to announce our first partner sale for the year end.
No, I think it's a process that we need to carefully manage, as Phil's alluded to make sure that they can demonstrate our product effectively. And I think we'll start to get visibility with Siemens of the pipeline that we can start building into our forecast probably towards the end of this year.
So the only other point I'd add, and it's a key point for us, but probably hasn't come through in the presentation, is that we've invested this year in sales staff and senior staff that come from a software or partnering background. So we've appointed a new managing director for our European Middle East business, whose background is around partner channels and distribution. And our new business development lead in North America came from Amazon Web Server, where she managed partner channels. So we're trying to build those skills in the business to actually run these partner channels and develop them as well.
And probably what I'd add, Tom, sorry, before we move on, is that progress towards that 3 million of ARR is all organic progress through direct channels. So I think that gives you an indicator of what could be achieved when the indirect channels start to kick in.
Well made. Can we focus on the fundraise? I've got two questions here, which I'm going to bring together. First question is, why do you need to raise funds? And does that give you enough cash to see you through? And Richard asks, post the 1.25 million subscription and property disposal, what is the pro forma cash runway, assuming base case awards? So a little bit of an overlap there.
Say that. You say that.
Okay.
Your world.
Yeah, absolutely. So there's no getting around the fact that the Genfly delay has caused us a short-term hole in our financing. And quite frankly, the equity raise is a bridge to allow us to continue investing in working capital and the Auxilium suite. The bridging need comes about because our overdraft position with HSBC have been incredibly supportive over the last few years of the business. Our overdraft facility does reduce after the completion of the property disposals, and that reduction down to the 1 million unsecured level that we've signposted previously kicks in on the 31st of October. So the timing of that reduction in our overdraft facility and the delay in contract awards has given rise to the need to go to our shareholders for support, which we're pleased to say our shareholders have been more than willing to be supportive. So that's all encouraging. In terms of bridging us, and is it enough? Yes, and yes. We have line of sight to meaningful cash flows later in the year and early into next year. In terms of then flowing into what a kind of a cash flow looks like next year on a steady state, well, I think our market, our analyst reports that are out in the domain are an accurate reflection of what that looks like. We fully expect next year to have an operating cash flow that's positive and that can fund the investing activity in Auxilium. And that's on a sensible view of run rate, a sensible view of conversion. Do you have anything?
No, that's very good.
Okay, great. Okay, super. That's very comprehensive. Thank you. And Rob has a question, which is an excellent closing question. You were active at DSEI last week, a great event. Do you have any particular reflections on the event and the potential for new activity for PENNANT?
Yes, great question. So I'm sure many people listening to this maybe attended themselves. And speaking from my perspective, I thought it was a fantastic event. I've been a number of years, and the buzz and the positivity and the sheer size of the event was quite overwhelming. For us as PENNANT, it was a very good event. One area I'll focus on in particular, if people follow LinkedIn or our website, you'd have seen that we announced a proof of concept demonstrator with a company called MSI Defence, a virtual reality trainer that interfaces a remote weapon station with the virtual world to allow training of shooting down drones in particular. And lo and behold, on the second day of GSEI, drone incursion into Poland caused a lot of noise. So we see that marketplace, that remote weapons space, as a very exciting part where we bring our technology around software to interface hardware. So let's be clear, we're not talking about developing training, we're talking about using software skills to bring together the virtual environment and real world equipment for the OEM to give them a training solution to complement their systems. And that can be applied to drones and other sectors. So for us, there was real, and the other really pleasing thing for me, and Darren, you can add afterwards, was the interest in Auxilium. So we're in conversations with a number of European primes, particularly in Eastern Europe and actually Northern Europe, who have taken trial licenses of the software suite and are looking to embed the suite into their systems because they currently use something like a Siemens Team Center, and this extends their digital thread through life piece I talked about earlier. And that sort of momentum has never happened for us at a trade show like that on the software side. So we're really starting to get recognized for the capability in the software side, not the legacy trading business, which is really pleasing.
I think I'll just add, yeah, it kind of confirms our belief that the defence industry on the ILS side is moving towards getting serious about having a global enterprise solution to manage ILS, to manage in-service support, and that puts us in a really good position to offer a solution and bid as those opportunities come to market.
And why is that? Because for 20 years, 30 years, we've had peace, and there hasn't been a requirement to be operationally ready. And now, if you've got to become operationally ready, you need the systems in place. So ILS is always, integrating logistics support, has always existed, but it's always been a necessary evil, if you like. Now it's a strategic prerogative. We've had admirals, we've had chief defence stand up and saying we've got to do support better, we've got to do support differently. If we're not ready, we're going to be in trouble. So we're in the right place. The challenge for us now is to execute.
Yeah, super. That is very convincing. Thank you, and lovely close. So thank you, Phil. Thank you, Darren. Could I ask investors not to close this session, as you will now be automatically redirected for the opportunity to provide your feedback. If anyone has further questions or would like additional information on Pennant, please do get in touch via pennant@walbrookpl.com. Thank you for attending, and we look forward to updating you again soon.
Thank you.